So next up, we got a panel, and we got my very good friend Joe here, actually. And I met Joe over at Istanbul as well, and there's a lot of great things I know about Joe. First of all, he's not only ex-Morgan Stanley, but he also has, he angel invests, and you have over, I think, 160,000 subscribers on YouTube. Is that correct?
Yes, correct.
Right, and you're educating the Japanese community about crypto, right? Could you tell us a little bit about that?
Yes. Hi, everyone. My name is Joe. I run crypto YouTube podcast for about for 4 years now. Now every day, talk about some sort of news, data, and what's happening in the crypto market to the Japanese audience.
And it seems like they like the content. You got a lot of subscribers, man. Let's give them a big round of applause.
Thank you.
So tell me about your panel. What's your panel going to be about? What are you going to be? What should the audience expect to learn?
Yeah. So today I'm going to ask panelists about DeFi meets. The PayFi meets DeFi, meaning we can learn about, of course, the PayFi, but we can explain DeFi is really complicated, right?
Yeah.
And we're going to learn from all those panelists how they adapt their complicated product to the simplified version, adapting to the mass audience, and hopefully PayFi can learn about that. And also, those integration is really different from others because DeFi is PvP, extracting values from others.
Right.
But this is very different.
And we have great panelists today. We have Erbil, who is the co-founder of Huma Finance, also one of the core organizers of PayFi Summit. Let's give him a big round of applause. Woo! And of course, we have my very good friend Jodo, working a trench master, building 4 apes by apes. Give him a big round of applause. I'll let them get started with the panel. Let's go, everybody.
Okay, let's get started. Shall we start from the brief intro of each of you?
I'll start.
Yeah.
Hi everyone, Joe here. I was previously co-founder of CoinHall. We got acquired by Jupiter in October 2024. Ever since then, I've been in Jupiter building our trench product. So basically trying to make Jupiter more suitable for the trenches, which entails real-time price charts, real-time everything, getting signals, stuff like that. So yeah, been working on that for Jupiter for the last couple of months.
Hi everybody, Erbil Karaman, co-founder of Huma Finance. My whole life I've been a technology enthusiast and entrepreneur, mostly building large-scale consumer products in Silicon Valley. And for the past 5 years or so, I've been in the fintech and payment financing world. That's where I met my co-founder, Richard, in our previous company building payment financing solutions in the US, tens of billions of dollars in transactions, innovating for the consumers. And that's where we found the need that the infrastructure actually is so broken. If you want to build global systems and really change the whole finance, you have to start from the network level. And we decided to build the first PayFi network, which became the largest PayFi network. Very happy to be here. And maybe a quick story that I met Joe at the Jupiter office last year when I was visiting Singapore, and he didn't know what he was facing. We had a lot of fun playing ping pong the whole day. So I left after a long few hours of ping pong play in the office, and I distracted the whole team from the important stuff they were trying to work on.
Other than me. Yeah. It was unassuming. We were like, no way this guy is gonna be good at ping pong. He was Jupiter's mostly Chinese guys. But yeah, he beat most of them.
All right, sounds good. So I want to ask two of you guys about this question. Why your product is special for this industry? Because Erbil, PayFi and Huma is building new innovation to the DeFi protocol, but also Joe, you from Jupiter and Pro, you have a lot of competitors. And it's really fierce, right? So, but why you're building this pretty solid positioning in this market? Joe, you want to start?
Yeah, I think for Jupiter's perspective, Jupiter aligned very closely with Solana. So I talked about this with Meow quite a bit as well. So even when post FTX, the market looked like it was like going to hell. Solana looked like it's going to disappear. Jupiter like stayed on. I imagine at a time when there's like freaking like 100K of volume a day, we still like were like, oh, integrating the next DEX. People like, oh, we are new liquidity venue. We are still trying to build on Solana. We still gave them a shot, right? So it's like at the time super contrarian. People really thought, and that was like sold $10, right? So that looked like a crazy bet, but the team stayed on. Just continued building, right? Then came obviously the breakthrough in late 2023, 2024. Jupiter came on its arc. We've never stopped shipping, right? So I think the team grew from about 10 plus people. Right now we are around like 100 after obviously a couple of acquisitions. We're still looking to like build more parts of the stack. Anything that we think like, oh, there's some areas we can contribute. So for example, like right now, Jupiter does think the trenches, the way people are dealing with like meme coins, is all like super PvP, not transparent, the way launches are done. So we're coming in to like start getting our hands dirty, trying to build like stuff like all these like real-time data, helping people identify like, hey, this token is quite likely a scam. So we are starting to go into that layer. Previously, we were primarily in the swapping, the trading space, right? I mean, by volume, obviously, Jupiter's the market leader there. Bunch of third parties, including like Phantom, all these other front ends do use Jupiter's technology for trading underneath. But I think what we're doing right now is really augmenting the front end layer so that people can come to the application, get more information about any single token, better evaluate, make it easier to like stay in the application, monitor, and yeah, we're just gonna like non-stop keep shipping. So yeah, it's a competition will always come, but we will never stop shipping. So yeah, we'll fight the competition.
Sounds good.
For Huma, the answer is actually Huma is not only changing the payments industry and high finances done how money moves today, it's also changing DeFi. So let's talk about how it both happening, and it happens in conjunction. Today, money moves between financial institutions, financial hubs, mostly through what we call information networks. You have SWIFT, ACH, you have layers like Visa and MasterCard. Unlike a lot of people believe, none of these networks actually transfer money. They transfer the information of money moving from one place to another. The problem is when you try to do that, there's a lot of other players you need to pull into the ecosystem to actually solve the problem of making sure that the money shows up in another place. And that means that you need to create all these different liquidity hubs. You need to have these settlement networks. You need to have this bank players or non-bank players. And that's what adds up to the time. That's what adds up to also the challenges of moving large amounts of money as a business. If you try to actually do that as a large Fortune 500 business, you have so much trouble moving money around. And Amazon coming to us and saying that I can't move money between US and Asia is a very clear symptom of this problem. And literally last year, a French bank, the largest French bank, sat down with us and said, we have $3 trillion we need to move, and we don't have a solution for it. SWIFT is broken. We have so many different assets and transactions, interbank transfer that we need to make. We need to make this 24/7. We can't afford not to do this 24/7. We need a solution. And they were amazed when we described the PayFi network and what it can do and how it can enable this 24/7. But when you take these liquidity players and banks out of the system, then you need to have a new liquidity layer that needs to plug into powering all of these payments. Where is that layer? When we think about DeFi today, we think about this, PvP play. We think about trading applications. We think about shitcoins and DEXs, but that's I think a misnomer in terms of not understanding what DeFi can be. DeFi, if you understand as a global liquidity network and global asset network, and something that can replace the needs of TradeFi and the banking system and the liquidity networks that exist in the traditional world, when you put those two things together, you basically have a complete system where money can move from one place to another without needing intermediaries. and assets can move from one place to another without needing intermediaries. And this is how we are changing the setup of the whole ecosystem. And that's why I think a lot of large financial institutions are very excited to plug in.
Thank you.
I've never done this for a panel before, but I love adding new people to the party, more new faces, right? Woo! Let's give Wilbert, I know he broke his arm, so let's have some sympathy. Thank you very much for coming, Wilbert.
You want to make an intro?
Yeah, nice to be here. My name is Wilbert. I am part of the ecosystem team at Pendle. So for those of you that don't know what Pendle is, essentially we're a infrastructure for yield tokenization as well as a marketplace for yield trading. Yeah.
Sounds great. Thank you so much. For the next question is about adoption. Wilbert, I'll give you a little bit of time to take a breath. But so I want to have a question for each one of you. So I want to go for Jupiter Joe. You just talked about the one of the edge or why you guys surviving is keep shipping, but shipping really great product, great, easy to use. People use every day. How did you come up with those features, functions, or how did you find out these product market fit? It's not easy, right? How did you guys actually did that?
I think for Jupiter, obviously we weren't, while right now we are number one DEX aggregator across crypto, we weren't the first. So it's when you're building something that already has some sort of product market fit, it's about how do you then become the best in the, call it domain, which is, I guess for us was Solana. I mean, it wasn't different behavior. At the time, people already knew there are different liquidity pools. People provide liquidity at different places to achieve best price. You use an aggregator, right? And that's a quite standard consumer model because people still use stuff like Agoda, Expedia when we're trying to book travel. So people broadly understood the category of aggregators. How do we constantly build stuff people like? I think so for that layer, the DEX aggregation layer, I mean, there was already data points. We had obviously taken inspiration from predecessors like 1inch, Matcha, all those guys from EVM space. For new products, right now, the ones we're building called Juke Trenches, the pro traders pretty clearly know what they want, right? Because there are also other more mature products in the space. So people will tell you I want faster execution time. I want to be able to see my chart in 1 second. I want market cap information. The good thing I think what we did well is we built a good attention vehicle first, and then because we have a bunch of sticky users, what we then do is integrate vertically to be okay, within the trading life cycle. So the way I see it is the trading life cycle is from discover to you first discover a token, whether you get a CA, you get the symbol, then you can evaluate it, right? This is when you look at price, market cap, holder information, look at trends, whatever. Then you actually trade the token, then you monitor it, and then it repeats, right? You then decide again, should I buy more? Should I sell more? Jupiter did well on the swap side, right? So then it's vertical integration. How then do we do well on the evaluation front, right? So that you're not opening Jupiter and something else like a DEX screener or some other product. So it's quite clear to because we already know what's the behavior on the gaps we have. It's quite easy to take that and integrate it in-app first-party application experience. So that's how kind of we dealt with it. It's not we are in super blue ocean, you're thinking of I have no idea what's the consumer behavior for this product. I mean, for us, we do know, right? I mean, there's hundreds of thousands of traders, whether they're trading meme coin or DeFi tokens, it's somewhat proven behavior already. So yeah.
Yeah, I think what Jupiter has done is incredible because one of the hardest things that I know from my early career, I was in charge of getting Facebook to 1 billion users. The consumer applications are hard and bringing consumer demand is really hard, and sticking that, and making sure that you have something of value all the time for these people is really, really hard because if there's a use case that works, there's going to be a million competitors and million tools that people can use. And there's going to be a new cool thing that people can go to. You need to constantly think about how do you drive more value and how do you keep up with all those new use cases that are coming up. And I think we did a pretty good job at Facebook. And we also identified that people like to connect in different ways. So, we didn't stay with Facebook. We went and acquired Instagram and WhatsApp because those are very, very different ways for people to connect. But at the same time, they serve the same principal goal, which is get people to connect and share, things with people. And when we were building Huma, it was a very different challenge because it's not a consumer, play. And we were building it around the time when Luna happened, and the whole industry was actually going through a huge meltdown. And even today we talk about this as the most the greatest thing that has happened to us, right? Because it actually killed the whole noise about all of these different use cases that actually didn't necessarily have much of a longevity in the ecosystem. And it really helped teams like us who are trying to build very fundamental infrastructure to flourish. Because during that time, there was literally no activity on blockchain. And we knew for sure there are so many global payment players who really need to solve their money movement problem. They need to solve these cross-border problems. They need to solve the problem of getting money from one place to another, with as much capital efficiency as possible and as cheap as possible. And we know we were sitting on this use case, knowing very well what they need, and we can just focus on this demand that we know is going to come once we have the products, the network, and the applications on top of it. And we were able to just go and build that and not worry about anything else. And the moment we built that, we start seeing this demand coming up. And now we knew at that point, okay, we have this large players using our network, and we have close to infinite demand, maybe trillions of dollars of demand that we can onboard to this. Now we need to go and focus on how to build the supply side and liquidity side of this problem. So we were lucky because if you need to bootstrap both sides of the network, it's almost an impossible problem. You need to be very, very lucky to be able to achieve that. We didn't need to do that because we could just focus on the demand problem first, get as much demand built up as possible, build as much yield because of the 10 basis point, 8 basis points, whatever you're charging per transaction basis, that builds up yield on double digit very quickly. And now, at a time when everybody's providing at most 4%, 5%, 6%, 8% yields, we can continue to provide double-digit yield, which means we can bring this liquidity layer, behind us. And that I think will continue to build this flywheel for us because more liquidity means bigger TradeFi players, bigger payment players will continue to use our platform. We'll create more demand, more use cases, more monetization opportunities. Those will pile up to more sustainable yield and will continue to build through the cycles.
I want to ask a different question to the Wilbert. So the product market fit for the Pendle was quite, I think at first a little bit struggling, but ended up really went great. And also now you're trying to scale to the next, I think, level. How did you find the product market fit first, and then how do you apply it for the next level scaling for your product?
Yeah, it's a good question. So I think today we're really fortunate at Pendle because we've became synonymous with fixed rates in DeFi. But again, like what Joe pointed out, Pendle V1, which was the initial iteration, did not find initial product market fit, right? Going from sub 100 million TVL all the way to 5 billion TVL that we are today. It's been a long journey. And I think one of the things is definitely market timing, right? So, early last year, a lot of the attention of the market was on the restaking space, ETH restaking, and you had this whole meta of points trading. And that accelerated Pendle's growth by a lot because it helped to simplify the product. Again, because what Pendle is a yield tokenization marketplace for yield trading. It's not a product that people easily understand. But today, we've simplified it to, if you want fixed yields, get PT, which is principal tokens. And if you want variable yield or leverage upside on the project's points or yield, then you would go for yield tokens or YT. So essentially, again, with the whole restaking segment and points, I think we captured that narrative really well. And one of the things that enabled us to do that was relentless experimentation with new initiatives and being able to stay in on top of trends, right? So I think that's really helped us by staying relevant to what is the market focusing on. And during the restaking segment, we launched a couple of liquid restaking tokens that had incentives from underlying yield as well as points. And I think what's interesting with Pendle is that it allows users to, in a way, value points, right? Because if you would like points or variable yield, you go for yield tokens. But if you think about it, the fixed rate on the PT side of things, the principal tokens, that's being provided in a way by people that purchase the yield tokens. So again, just to do a quick summary. So what Pendle is essentially today, any yield-bearing asset in DeFi can be brought to Pendle, and we split it into PT and YT. It's similar to interest rate swaps in TradFi, right? But essentially with principal tokens, it's similar to a zero coupon bond where you purchase it and at maturity, you get a fixed interest. On the other side, you have yield tokens or YT, and what that gives you is leverage exposure. So you're trading the yield separately from the principal. So I think that's one of the things. And also being able to spot what isn't working and being able to kill things really fast if it's not working out. Yeah, so I think those are like general pointers in terms of how we've been able to scale. In terms of our next stage of growth, I think we're just continuing to expand on what we've done really well and what the market likes about Pendle. So essentially building on our strongest asset, which is today the expansion of PT into various lending markets as well as different EVM and non-EVM networks. Actually today, principal tokens from Pendle constitute about 1.1 billion in terms of collateral on various lending markets. So I think the next game would be to expand it to hopefully TradFi Rails as well. So that would be, the next stage of growth.
Sounds great. Next question might be, I think, the most important question for this panel. What are the growth hack for your platform, right? Because your product is already growing up, it's really, people love it. And probably the Huma, you're really, did really well in the Web2 business space. Maybe something that you can, explain, or is there anything that you're going to apply to this Web3 business? So,
happy to start. One of the things that I learned about growth, and this is actually goes back in years with Meow, Jupiter's founder. I met him on Quora. I'm not sure if you guys remember Quora, the question answer site. I was in Silicon Valley at the time, and I was part of this growth hacking community that was very small, and we were behind a lot of early projects like Dig and Facebook and Instagram. It was called Bourbon at the time. And YouTube and others. And there was a small community of us, and Mia was part of that community. And we would, constantly exchange ideas about like how do you actually grow products and what do the tactics look like. A lot of times when you try to distill this down, it will come into three things. Is one, do you really understand the underlying use case and behavior people want to surface through your product? This is the most critical thing. If you do not understand what kind of behaviors people want to manifest and surface through your product, no kind of tactic will work, because you need to first make sure that your product makes this seamlessly. For Facebook, it included things like making sure people don't even need an email account, email accounts to be able to sign up, because in emerging markets, nobody has email accounts at the time. People could just, buy a phone. The phone would come with Facebook installed. All they had to do is basically just, turn on the phone, and then the network would automatically, sign in with their, phone number, and they would basically have an account, and it would find, through their contact list all of their friends, so they can actually pop up their news feed, very quickly. So you want to make everything seamlessly and get people to the, the behavior they want to manifest as quickly as possible. So this is one of the most critical insights, and I think, Jupiter does it amazingly, because you just need to go there, and then it takes maybe 1 or 2 clicks to do what you want to do. And I'm very happy with the ape mode, stuff coming into the Jupiter interface, because you really want to make sure that, people don't have time. People don't have the, a chance to figure things out. It needs to be so obvious. They need to come and do the behavior. Number one. Number two, you need to understand where you create the growth flywheel. And this is different for every single product, right? For Pendle, they innovated on this super sophisticated concept, but because the flywheel is so powerful, that it basically started spreading like crazy, because people are realizing that you can loop, through a lot of opportunities and, multiply your yield that, you used to get maybe 6%, 7%, 8%. With looping, you can, take it to 50%. And that flywheel really enabled Pendle to actually rapidly grow, because people, when they realize that this is something they can do, doesn't matter if they need to spend more time and it's sophisticated, they figure it out, they start having this behavior. For us, so far, our job has been easier because, again, we tapped into a very deep, large demand ecosystem. But with the new permissionless product, we're actually taking an example from the playbook. In growth hacking, if there's one rule is make sure that you understand the tactics so well that if something will work for you, use it, right? There's no reason to reinvent the wheel if there's a proven concept. So we're taking concepts from both Ape and Pendle, and the new version of Huma Finance, permissionless, is going to have an Ape mode, and it's going to have swappable yield, and the yield can be swapped to not just a YT and PT components, and we'll work with Pendle on that. It can be swapped from USDC or stable yield to Huma token yield. And that gives you basically a similar type of flywheel on the permissionless product. At least we hope that will be the case.
Yeah, I'll go next. For Jupiter, we believe pushing multiple pillars at once. So we will talk a lot about what the first pillar being the product itself, the second being the community, the third being the token, and last being the brand. So it's I think we approach it constantly thinking about these four things. So you build obviously a good brand, token, and community. That part I think kudos to Michal. They do that part super well. Then obviously your product has to be good, right? So I think that there was no real hack. I think the unlock obviously in crypto was by being able to distribute tokens, you have this whole attention vehicle, which Web2 doesn't really have. You look at the concepts of Web2 growth hacking, you don't have things like wealth creation, right? I mean, you look at something like Jupiter, when you do a big airdrop, you're distributing few hundred mil. You don't see that in Web2, right? Web2, you literally raise a few hundred mil just to build your product to 1 million users, right? So we leverage all these pillars together, constantly ship. I think we also have this one strong belief that product association with a certain outcome has to be very clear. So Jupiter initially launched with being the best place to trade, right? Best DEX aggregation, best access to liquidity, best access to tokens. You always hear you want to be the best in something, right? Then only after you start branching out, you start vertically integrating, right? I think Pendle did super well in the association with a very otherwise complicated TradFi concept, interest rate swap. They were the best in that category, right? Slowly they moved towards being one of the top players in yield, which is a much broader, much more abstract category, right? But we always start with something very clear, right? So that's kind of how we've been dealing with it.
Yeah, I think for Pendle, essentially what I shared earlier was being able to stay on top of trends. I think it's always easier to ride the wave than to fight, what the current market trend is. So the way we see Pendle is that it's really versatile and dynamic as a protocol. It used to be that Pendle was all about restaking and LRT protocols, and then the market's attention shifted for a period of time to BTC Fi and BTC restaking with Babylon and a lot of this LRT protocols building on top, and then Pendle could capture that growth as well. And then came other narratives like stablecoin yields and RWA, which is I think today still very relevant and one of the important pillars of focus for Pendle. But essentially anything that produces variable yield can be brought to Pendle and split into PT and YT for users to trade, whether they want variable yield or points, or if they prefer simply to get a fixed yield. And I think Erbil mentioned a good point earlier about understanding user archetypes, right? So for Pendle, usually for PT, most of the people deploying on PT, the fixed rate tokens, are funds, instis, and VCs themselves, perhaps more than 50%. And on the YT side of things, they happen to be your average degen or smart DeFi farmers. So it's important to understand who your user groups are and to market and to grow your growth strategies accordingly. So I think that's something that we've been able to do really well. Those are the main key points.
Thank you. Next question is, people always go after one token, what are you going to do with the token and so on. This is a very annoying question probably for the people run the project. But what are the difference between project? The one is just launch a token and people just go away. One people stick with. I think all of your product, I really believe people don't care, or people keep using your product whether or not you have a token, right? What are the differences, or what are the things that you have to think about to sustain those flows?
Yeah, it's all about like incentive alignment, right? I personally believe like you have to make like maximize EV expected value kind of moves. If like you create a scenario where it's like the user has no choice, after they receive your airdrop, nothing's interesting, nothing's in the pipeline, they will and they can dump your token, right? So I think Jupiter's done a couple of like unique things. So we have this thing called like ASR, where it's like active staking rewards. So if you are just like I don't know, like a not long-term investor, you hold Jup, but you're not willing to stake it, you're not willing to participate in governance, you definitely get like lower yield than than the guys who are active, right? So we've kind of systemically create that kind of incentive alignment, rather than be like, oh, I hope you hold my token and love us. No, right? You should be creating like systems that actually support this behavior. Yeah.
Yeah, I think Jupiter has done an amazing job on this one. The biggest problem in the industry is that a lot of projects believe that the token itself can be the user acquisition tool. The token can be the tool to bring a lot of demand and use cases and applications and etc. to whatever they're trying to do. So they go after launching a token way before they actually find product market fit. And it's so freaking hard to find product market fit. By artificially creating a token and tokenomic, you're actually making it almost impossible to find product market fit, because you're creating a narrative, you're creating a story that actually might not fit into what we're going to have product market fit. You need to allow yourself to pivot multiple times, really find this critical use case, critical value creation point that you have, so that you can make sure that your business, your users are coming in not just because of token, because your product, your platform, your network has value for them, and that is also generating business value and business revenue. And Jupiter has gone through that pivoting, multiple times. Pendle has gone, multiple cycles and transitioned from, different solutions to different markets until they really created this, product market fit. And Huma is doing the same thing. We decided not to launch token until we knew our business has massive demand. We have product market fit and we can generate shit tons of revenue. And only then, we decided to launch a token. Why? Because then you actually have your core product, your core value. You have your long-term roadmap, but you also have billions of dollars transitioning through your network. You have the real users, real enterprises using it. Then you not necessarily need to worry about just attracting a lot of airdrop farmers. You just worry about how to create real value with the token, and how to get people who wants to invest in that real value and the thesis that you actually want to build this future. I think that's a much better way of thinking about tokens and thinking about sustaining after you have a token, because if the token is the thing people are coming for, you're not going to survive after that. I actually have no example of any project who's gone with that route and then end up, finding product market fits. It's almost always the opposite.
Yeah, I think you guys already brought up some really good points. I think it really goes back to PMF. That's something that we see by helping a lot of DeFi protocols on Pendle that are looking to bootstrap TVL and again launch tokens. It's always a question of again incentive alignment as well, right? And in the long run, the protocol needs to provide fundamental value to your users, and that is something that I think a lot of protocols try to rush, right? And like they're thinking maybe if I launch my tokens, I can use it as additional incentives. But again, sustainability is another thing that some protocols don't consider. In the long run, the protocol again needs to provide value and has to be profitable. And beyond that, I think for Pendles, like our approach is really just to focus on the fundamental product, because we adopt similar tokenomics model to curve convex, right? Essentially V curve boosting model. So essentially, 80% of the LP fees on Pendle goes to people that lock up Pendle for VE Pendle yield. So when there's organically more trading volume on Pendle, that translates into higher revenue for VE Pendle holders. So it's a flywheel effect again. But it all starts from having fundamental product market fit.
Thank you. And now we only have like 1 minute and 30 seconds. So from each of you, maybe any comments, anything you want to like mention here, talking about the visions or whatever, get the audience excited.
Maybe just touching on the last point again on like the token part. I think the attention and narrative fit is actually like quite important, but it's also a tricky game, right? You see some projects trying to write like every single narrative, but they're never the best at any, so they just keep sucking, right? Like you follow this, you get like marginally like 10 more users, you follow the next trend, but then you just keep like spreading your attention and you're like mediocre at best in each, you still suck, right? So but that's it. The association with the category is like a very important one. Like, I mean, Jupiter obviously associates with something like DeFi, and now we're building our own layer one. So it's like, yeah, I think that part's something that you do a lot of forward thinking about.
I like that. So to me, something is very clear, and I still do not think the industry understands this. When we talk about DeFi, we're still thinking about this permissionless trading experience for some bullshit assets that, you know, I, to be honest, cannot care less about, except a few of them. But if you think about DeFi as a new financial infrastructure that moves money, liquidity, value, in any asset all around the world in a much more capital efficient, time efficient way, with the programmatic systems, both on the money side, programmatic money, but also programmatic assets, it changes everything. It changes everything. And I think that the big institutions are right now waking up to this. I don't think the DeFi ecosystem itself has woken up to this. I think we're still thinking about DeFi in this relatively limited, relatively, kind of constrained walls. But when you actually think about how the big guys are thinking about it, you realize that we're sitting on a gold mine. You just need to make sure that we are changing the way we're building the new DeFi tools and new DeFi products, and not insisting that people have to utilize a broken vault experience to buy something shitty. But we just plug ourselves into every single experience, business, consumer, every single financial rail to replace what exists today. And that will make DeFi from what it is today to 1000x, of the volume and the use case and the users.
Yeah, I fully agree. I think when you look at the total addressable market today of DeFi compared to TradFi, even in the category of just yield, interest rate derivatives in TradFi are a 500 trillion market, right? And compare that to DeFi is barely even 1% of that. So I think, again, it goes back to what Erbil mentioned. It's good to think about the larger value that DeFi provides to users. And also, I think just one general key takeaway here would probably be to just do one thing well and keep building on that, right? Instead of trying to do too many things and trying to do like a super app, for example. We're not too much fans of that. I think we are trying to establish, especially for Pendle, our yield, like tokenization, like being the leader in the yield tokenization space, and then from there moving on to expanding PT as a collateral or other forms of tangent or complementary product angles. But they're all fundamentally still driving the idea of Pendle being the leader in the yield tokenization space. Yeah.
All right. Thank you so much.
Thank you.
Big round of applause for our panelists, everybody. Dude, great job, guys. Wow. We'll give a fist bump over here. Great job. Good to see you, Joe.